joining us. We have here today with us Aaron Herwold Swalwell. And as I turn it over to you guys, please feel free to introduce yourselves and just tell us who you are and what you do. We also bring to us Bill Hops from Ag and Risk Consulting, Mitchell Hora from Continuum Ag, Kyle Walker from People's Company, and Dave Muth from Alternative Equity Advisors. How we're going to do this today is we are going to, each panelist has about 5 minutes or so to speak on their topics. And then once we get through, we're going to have some questions. And with that, Aaron, I have you at the top of the list. Please feel free to introduce yourself.
Yeah, Mike, you shouldn't have given the lawyer only 5 minutes right at the beginning. That was not a good, no, I'm just kidding. Hi, everyone. Great to be here today. This is a topic that I always find joy in talking about. Been dealing with farm leasing from a legal standpoint for a lot of years. When I first started practicing, I worked up at Iowa State at the Center for Agricultural Law and Taxation, so fielded a lot of questions over the years regarding farm leases, farm lease termination, how to renegotiate farm leases, those types of things. And so now I'm in private practice at Brick Gentry and get to work with the folks at People's Company quite a bit. And that's always a great experience and talk about farm leasing. And so I think, you know, a few of do you want us just to introduce ourselves first, or do you want us to give our 5 minutes?
However you want, but introduce yourself first. That would be great.
Okay. So, you know, I'm from a farm in Mingo, Iowa. So like I was just telling everybody, we had quite a bit of storm damage yesterday, as I'm sure a lot of people on this call did too. So, you know, as we're talking about issues that arise with COVID-19 too, we'll kind of try to weave in some talk about, you know, damage to property and those types of things from a legal standpoint. Thank you.
All righty. Next we have Bill Hops. Bill, please feel free.
Hi, I'm Bill Hops. I'm with Ag and Risk Consulting, formerly known as Russell Consulting Group. That's probably a more familiar name to most people. And we provide financial and marketing advice to farmers. I do have a couple slides here, Mike, if you can get those up. Basically, Molly asked me to talk about the grain markets and some of the impact of profitability that we've seen here. So I decided that it would be a good idea if we can just jump down to that monthly corn chart to look back a little bit and just talk about a little bit of history here. This is a monthly continuation chart for September corn. And as you can see, in 2007, we started a period of extreme volatility that lasted for about 7 years. And most of us that have been in ag, you know, I can go through the reasons that we had the highs and lows and so forth. But in essence of time here, I just want to point out a couple things here. That this is no surprise that we made that jump to the extreme volatility for a period after about 30 years of a price that ranged from $1.50 to $3 a bushel. When we do go through those jumps, the old highs become the new lows. And as you can see on the bottom blue line there, that the old high of $3 is essentially held. And we expect that to continue to hold, even though we're stuck with some burdensome supplies. We don't expect corn to trade below $3 for any extended period of time. When you look at the time period from 2015 to 2020, we'll see that we've experienced low volatility. Basically for the last 6 years. And if someone asked, well, what's the effect of COVID-19 on the corn market here? Clear over on the right, 2020 Disco starts in January there, and the answer is not much. Now, whether that's just coincidence, I think it's more of a function of corn, soybeans, all commodities are food products, and those are going to be a little more stable in times of extreme volatility. So that's where we're at as far as where we've been. On corn, we'll jump to the bean chart, Mike. And, really pretty similar. I mean, they're two separate markets run, by supply and demand for each, obviously, but you can see the jump to the high volatility in 2007 and right on to the end of 2014 for soybeans as well. We had maybe some shorter crops and some better demand that have kept the prices up a little bit longer. But I think the deciding factor here on soybeans was in May of 2018. You can count 5 bars over there. The long black bar is May of 2018 when we experienced the retaliation for the tariffs from China. So that dropped the price, and that's kept the price pretty well limited here since then. So where I'm going with this here is I also want to, the next 2 slides, show you what we do at Agturian is we benchmark our customers for financial performance, and we have some key ratios we use. But what I want to point to here is the return on assets and return on equity. And if you look at the first chart, it's from 2011 to 2015. And jump down to the last 2 there. We had decent returns, 12% return on assets and 20% return on equity for several years there, and even a couple years before that if I went back. But then in 2014, it dropped dramatically. And I think it's interesting that correlates pretty well with that monthly continuation chart that I showed you for corn and beans. The next chart then, Mike, is the previous 5 years here that we've just experienced. So, we had a kind of a dip there in 2016 on return on assets and return on equity that coincided with the 2015 crop being held on balance sheets and probably not sold for the levels that were on the balance sheets, which generally represents a double whammy when you end up doing the following year balance sheet. So I don't know how much more time I have. I'm guessing very little. I would, the other things that we benchmark are machinery and labor cost per acre, and we like to combine the 2. If you look at the combined machinery and labor for 2020, it's $180 an acre. And if you could jump back to the previous slide and then look at all the way over to 2011, combined machinery and labor per acre is 135. So that represents a $45 jump over that 10-year period, and that's bottom line right out of the farmer's pocket. So I think that's important to know and understand as we look at the profitability in farming operations. With that,
all right. Done. Thank you, thank you, Bill. I appreciate it. So next we have on our list, Mitch Hora with Continuum Ag.
Yeah, awesome. We'll just continue to kind of tag right off of what Bill shared there. I'll see if I can get my sharing to work. Host has disabled screen share. Am I able to do that? But I'll start giving some of my intro while we're at it. Here we go.
You should be able to do it now.
Let's see if this is going to work. Can you guys still see that?
Yes.
Perfect. Yeah, really happy to jump on and share some quick insights today. My name is Mitchell Hora. I'm a 7th generation farmer down in Washington County, Iowa, so southeast Iowa. I'm going to spend most of my time running my soil health company, Continuum Ag, but we work with a wide array of farmers kind of all over the world. As I was putting together some of this information here, it was, the agronomic outlook and such for this year, things were looking pretty darn good, and crop has been looking good. Things are coming together. Maybe not the best crop ever. And there's obviously some spots where we've got some drought. But for the most part, crop got in really well. Things got in, looked great. I mean, this is from some of the stuff I was looking at maybe a week or two ago. Things are coming along. It's got a long way to go yet. And, but fields are super consistent. We don't see a lot of the major issue areas within fields like we've seen over the last couple of years of being really wet. A lot more consistency out there across the farm. And the crop was looking really well, obviously. And then let's see if we can do this, because I thought this was a pretty cool visual from yesterday that somebody on Twitter put together. I didn't make this, but this storm that just kind of came out of nowhere, of course, and came through and wiped everything out. And so now my entire presentation, of course, is not what it would have been if we would have had this discussion yesterday morning. So here's my crop report now that I had prepared, torn up and thrown in the trash. So we'll see. I have no idea what's going to happen. That a lot of the crop around the state looks a lot like this. Flattened, issues on grain bins being just taken out. And this is one of my customers even, so from major operations to the family farm, being majorly taken out. And in talking with some folks here earlier from Secretary of Ag's office, they were saying they're estimating about 10 million acres being damaged by that storm yesterday. So going from, I don't know how that'll affect the crop market. Obviously, we haven't seen any of that yet. Hopefully pricing will be a little bit better, because overall this report was going to be, I think we're going to have another huge crop and prices aren't going to get any better. That's for sure. So what are we going to do? Well, now hopefully prices get a little bit better, but my response is still, what are we going to do, especially on the farm? How are these farmers going to focus on resilience? And what we're doing is trying to find that way to diversify, trying to be more resilient. We weren't directly hit by this yesterday, as a specific area going all the way though over to Indiana and Ohio. But how do we find more opportunity to diversify, to be resilient against weather, to be resilient against issues and such? And the big takeaway, I think, that yesterday was hopefully the final nail in the coffin in terms of, some of these programs and some of these things that are going to help to save us economically. I'm really worried about some of those things kind of drying up. And what I mean by that is, payments coming out for trade war offsets, for COVID offsets, for other crop insurance kind of things. And now this crop insurance and natural disaster at scale. Really worried. And I think, as people that can have some major influence over the farm, we have to focus on that resilience. And how do we make sure that no matter what happens, we are able to focus on the bottom dollar? So I think focusing on fine tuning those inputs, like we just learned about, that inputs keep going up, prices aren't necessarily fixing themselves. So how are we going to diversify? How are we going to find other opportunities here? And I think we can sequester our own nutrients. We can free up nutrients in the soil. We can improve water infiltration, improve soil structure to help to be more resilient, implementing better sustainable ag practices. We've been trying a whole bunch of these different things, and there's a big focus on this, just trying to put a more positive spin on what's been obviously a very trivial year. Trying new things and to diversify. We're messing with 60-inch corn and these diverse cover crops, and able to implement cover crops down into that 60-inch corn. This is what it looked like here about a month ago. Planting cover crops down in, and there's a lot of cattle farmers that are able to now harvest a corn crop and graze cattle by utilizing cover crops in this kind of system. Just focus on that bottom line, focusing on being profitable across our farms. Relay cropping is another thing that we're doing, harvesting rye and soybeans on the same acre. I think there's opportunity for us to protect the crop through systems like this, finding more opportunity to diversify. We've got barley on our farm this year, mustard on our farm this year. How do we make sure that even if, economics don't recover in the short term, that there's other opportunities, just like as we diversify our portfolios, diversifying our farming systems too, to make sure we do have opportunity. To leave you guys with this here, as we look at, future and in finding more opportunities to be profitable on the farm, we're really focused on these ecosystem markets of being able to sell carbon credits, water quality credits, water efficiency credits, and focus on crop quality or nutrient density. So happy to dig into to more of this later. But overall, end of the day, my message is keeping our heads up, and agriculture always finds a way to keep pressing on. So we're gonna have to do the same here now.
Very good. Thank you, Mitch. So now we move on to Kyle Walker. Kyle.
Everybody hear me?
Yes.
Okay, well, I'm Kyle Walker, originally from Scranton, Iowa, which is a little town in west central Iowa. Been a farm manager and working with People's Company for the last 6 years now, exclusively in land management for the last 5. My title is Senior Land Manager, and I work out of our Indianola office. My accreditations include I'm an accredited farm manager and an accredited ag consultant with the American Society of Farm Managers and Real Appraiser. I'm also a certified agriculture consultant with the American Society of Ag Consultants, and hold real estates in Iowa, Minnesota, Illinois, Missouri, and Arkansas. I manage several farms across Iowa and the surrounding states. So my topic today was leasing. So I tried to put some thoughts together as far as what I feel is relevant for the group. And at this point, lease negotiations for the 2021 crop are in the very early stages. Negotiations could be a bit complicated considering the current low commodity price environment and the uncertainty with the global markets, trade, and November elections. My landowner clients ultimately call me often, and they want to know if termination should be served. Termination deadline is coming up upon us here, September 1st. There really isn't a blanket yes or no answer, in my opinion, and every situation should be handled on a case-by-case basis. For instance, termination may need to be served to establish a written lease if there's only a verbal lease in place. Other examples could be including an updated conservation plan or provision in the lease that wasn't there prior, or something you want to move to in the future. So if your 2019 and 20 lease or 20 lease was at a fair rental rate, tenant operators may be asking landowners for a rate reduction this year. Based on current commodity prices, I could see that happening. Lease termination law allows for the landowner or tenant to terminate the lease by September 1st. Oftentimes it's difficult for a tenant to terminate a landowner, is what I found, and I rarely receive terminations from tenants. They normally want to wait or are willing to lease the farm or let it roll another year and not rock the boat. So my advice to both parties is try and communicate goals and objectives as early as possible. My clients and I prefer to work with tenants who communicate regularly and are transparent with information required within our lease. People's Company's proprietary lease requires yield, fertility, and insurance documentation for the tenant. Information transparency by the tenant establishes a strong relationship, and it makes it so the owner doesn't want to find a new tenant, in my opinion. This also allows me to break down fair rental rates based off the actual farm yields and current commodity prices for the coming year. Another way People's Company landowners and tenants could work together is identifying unprofitable acres on your farm. This could be done through like soil loss reports and profitability maps. This area usually shows areas on each farm which may be better suited to be taken out of production, such as highly erodible areas with lighter soils or traditionally wet soils. These areas could be enrolled in CRP or government set-aside, reducing the marginal acres on the farm and protecting the environmentally sensitive acres. So as we enter 2021, farming is a bit messy and complicated. Many farmers are starting to think out of the typical cash rent box, so to speak. This year, I feel flex leases may become more prominent. Flex leases basically guarantee a landowner a cash rent payment each year, and then plus a bonus payment if gross revenue exceeds a predetermined base amount, or what I call a trigger price. This allows the landowner to partake in the crop upside without the additional risk. So that's something landowners may want to keep in mind if they're going to negotiate this year. So landowners willing to take on risk and crop ownership may be interested in a custom farming scenario, or even our new People's Company direct operation platform that we're set to unroll here soon. These scenarios allow the landowner full financial control in crop production and farming operations. They also allow the landowner to actively participate in crop production, as well as access to crop disaster payments, or payments such as MFP or Market Facilitation Program, or the CFAP program, the Coronavirus Food Assistance Program. I heard today that they released the final 20% of the CFAP for the previous year. So landowners would have full control of conservation and sustainability in these practices. And this ultimately will drive your long-term appreciation on your farm. Other exciting opportunities could be transitioning to organic production. Organic commodity prices are typically 2 to 3 times higher than typical corn and soybean prices. Typical organic conversion takes 3 years for organic certification. And we handle quite a few organic assets. Currently, People's Company is actively managing a number of organic assets across the country. This includes 1,100 acres in the Arkansas Delta, another 1,200 acres in northern Minnesota. I believe we have 3,000 acres out in Oregon, and which has many diverse crops. And we also have some smaller managed organic assets here in Iowa, such as the Magma Farm in Madison County. So my final thoughts on this, I guess, would just try and be open and honest, communicate with the current tenant, be very clear on your goals and objections and what you want to accomplish for the coming year. Landowners in general need to focus more on implementing sustainable practices, which will drive long-term appreciation, instead of focusing on the short-term annual income and just trying to charge high rents to tenants, year after year. I don't feel like that's going to do anything beneficial to your farm long-term. And then finally, organic or specialty crops are becoming more prevalent in this low commodity environment. Landowners willing to take on something like this, or even maybe a custom farming platform, may seek higher rewards with a higher risk. So that's all I have.
Right. Thank you, Kyle. Appreciate that. So next we have Dave Muth from Alternative Equity Advisors.
Good afternoon. Can you hear me all right, Mike?
Yes.
All right, excellent. So I'm an Iowa farm kid. I've got an active farming operation in north central Iowa. Part of that, generation that got kicked off the farm, my parents started in 1980. It was tough. So went off to school, trained up as an engineer. I've worked in biofuels and built an ag tech company called Ag Solver. And then I'm working now on building out Alternative Equity Advisors, which is the farmland asset management sort of sister company to People's, where we work on direct ownership, separate account investing for a client. So we work closely with Kyle and the team in terms of implementing the management strategies. And I want to give you guys a little bit of a perspective on what we're seeing from a national standpoint in terms of opportunities that are out there, and how we're going to face and what we can do relative to some of the pressures and some of the challenges that folks have brought up here. So just a little bit of context, right? Sometimes we get so focused in what we're working on locally, understanding the full scope of the farmland market in the U.S. It's a $3.2 trillion asset. We're talking about 390 million acres. Now, corn, soybeans, and wheat, the big three commodities, still drive the primary acres. But if we look at what farmland's done from a landowner and investment perspective, we're incredibly competitive, and from a total return standpoint, we actually beat most of the other equities out there on a long-term basis. Now, you've heard a lot about some of these pressures that we're facing. We've seen a little bit of correction on some farmland values, but by and large, land values are holding pretty steady. So we've talked about the commodity trend, right? We're almost 10 years into this downward cycle. We see the supply overhangs that was certainly talked about already. And that's impacting and creating a little bit of a weaker farmer finance kind of issue. Now, with that said, right, this chart here showing a little bit higher rate of delinquencies and debt, it seems like it's growing. The reality is that we're still pretty healthy, right? Delinquencies are still incredibly low, and the asset class is still strong overall. So what's interesting is with these pressures, we haven't seen significant correction in values. We have seen a little bit of a slowdown in the growth rate. And that's coming from a little bit of cap rate compression, right? So those annual return expectations continue to go down. Farmers are still buying about 80% of the land for sale, particularly in the Midwest and the high throughput. And the very best soil, the very best ground out there, we have seen pretty flat characteristics over the past couple of years. Now, with all of this said, there's a handful of really interesting opportunities out there. So when we're looking at representing clients and trying to put portfolios together across the entire U.S., there's just a handful of trends that we're paying a lot of attention to. Right now, consumers are showing a very clear preference for food that they understand where it's coming from and what its history is, right? This is manifesting itself in more organic, certainly. Also just traceability and sustainability certification kinds of efforts. Very clear trend there, and that's creating premium in the marketplace that we can take advantage of. We talk a lot about this notion of financialization of the asset class. There's some significant demographic trends that are going to cause a recapitalization of the asset class. And that is also, we're also seeing significant more interest from institutional and professional investors. And this is kind of a COVID impact also. Our phones have been a little bit more busy with folks over the past, let's call it 8 to 10 weeks, that haven't been in the farmland asset class. And one of the first things they'll often say is, hey, I don't know anything about farmland. Tell me how to make it work. And what's driving that is, historically, they've looked at the annual cash yield from owning farmland, and it hasn't been that appealing. But there's a lot of additional benefits that are starting to show up, and just having an asset, working in an asset class that's not quite as volatile is really appealing for a lot of folks right now. The technology story is significant, and that's evolved a little bit in my mind, and we'll talk about that a little bit more. And the ability from a management standpoint to be able to tell the story of the production all the way through to the food product, that is creating real value and ongoing market access. And we do see these pockets of distress out there that are creating some interesting opportunities also. So a little bit more on the consumer preference side. The reality that we're facing is that organic consumption is growing at a significantly faster rate than organic production in the U.S. Right now, we're at about 60% of the organic corn consumed in the U.S. is imported. About 80% of the organic soybeans produced in the U.S. are imported. Now, these are from countries where there's real concerns about fraud. Okay, I just saw an article here in the last couple of days where USDA is tightening some certification standards to help crack down on that. But overall, when we look at these trends, we see a little bit of a runway for this 2 to 3x price premium. Beyond that, we're also seeing consumer preferences towards local, or at least creating the entire story of understanding that food's origins. And we're seeing very clear preferences and willingness to pay more for those products. Okay, so management with some optionality on that front is a significant opportunity. The demographic shift is going to be significant, right? So roughly 80% of the farmland in the U.S. is owned by somebody 55 or older, and about half of that is owned by somebody 75 or older. So we've had this continual lack of supply relative to demand that's kept prices strong, okay? And this will continue as we move forward, but we're going to see a recapitalization of the asset class. And this is an absolutely amazing number. That $3.2 trillion asset class across the country is only 13.9% levered. Okay, there is an incredible amount of capital that's locked up, and as we see more and more investment moving into the asset class, we should see some efficiency start to gain in the whole sector. Another piece that we're really focused on from a management platform standpoint is sustainability. We're in the Leading Harvest Initiative, which is a group that's come together over the last couple of years. It's the 8 largest institutional landowners in the U.S. that several are global in their reach. And it's created a sustainability standard focused on the landowner, which we think is really critical, right? Because a lot of the economic story on implementing these sustainability and conservation focused practices really comes back in the biggest way to the landowner. Okay, so it's a third-party nonprofit audited certification. And every single acre in our investment platform and the People's Management platform will move through Leading Harvest. And it does a couple things for the landowner. One, it creates a standard with some real backing behind it to have some credibility around the management practices. It also is focused on that long-term asset value, which is the biggest piece of farmland returns, right? The annual cash yields we like to think of as in the 3 to 5% range, with that appreciation historically on a 10-year plus basis in the 5 to 9% annual range. And we really need to focus on that component of the return. Now, one of the interesting things that we also think is important here, in the near term and even longer term, it's not clear that we're going to get paid a lot more for quote unquote sustainably sourced products. But we do see a roadmap to where we're going to have to prove certain management practices and levels of sustainability just to maintain access to the existing supply chain markets. And all of these CPGs and the food brands are focused on this with corporate sustainability goals that have been reported to their shareholders, and they're taking significant action on. So we believe that implementing this kind of standard in these practices are going to be critical for an asset to be able to maintain the productive access to the existing market pathways. The technology side of things is really interesting. I spent a lot of years working on how we take data and start to create additional profit on an asset-by-asset basis. That's still there. We still see, and we're working on this technology value bridge where each individual asset can perform better. We can get better return, more profit. From a business standpoint and a management standpoint, and Kyle talked a little bit about the direct operations platform, we see a very near-term benefit of the access to data and information is we can actually manage disparate assets in a clean, clear way, right? The ability to get live data feeds off of equipment allows us as a manager to be working remotely and understand how operations are getting done, the timeliness, the effectiveness of these operations. And that brings more opportunities to our landowners to think about getting deeper into the operations on their assets, which can create additional opportunities for return, but at the same time, it adds some optionality for them to be able to be responsive to markets. So with that, I think that's what I'll share for right now, and happy to answer questions as we get into that part of the conversation, Mike.
Okay, yes, so we did have some questions come in. And Dave, I'll just go ahead and ask you, what, in your opinion, will have the largest impact in the agricultural market over the next 12 months?
The largest impact in the market over the next 12 months?
Yes.
That's a really tough question. You know, certainly we're not clear of weather impacts for this year, right? We saw some of that in when Mitchell was talking, and we know that I certainly am in that drought category with some of my farms where it's not clear where it's going to play out. So I would say that we still have an opportunity for some significant impacts on the weather side with the crops that are in the ground now. You know, the political climate is interesting too, right? And you can't control that. You don't know where it's going to go. We like to sort of operate in a mode where we do the right thing and produce good crops and manage effectively. But that is going to have an impact, I would suspect, when we start talking about a 12-month range. And it's not exactly clear which way and which direction it's going to go, other than it feels like it is going to have a little bit of an impact. Beyond that, I would say if you're narrowing it down to 12 months, those two things pop into my mind.
Very good. Aaron, this one's for you. What is a common mistake that you see landowners do when writing their own lease?
That's a good one. Yeah, and I kind of just introduced myself and didn't go through my spiel, so I might incorporate this here in my answer, Mike. But yeah, some of the biggest things that I think landowners do that maybe shoots them in the foot a little bit would be, not terminating those leases properly if they seek to terminate the lease prior to September 1st. Kyle talked about that a lot too. We have so many, I'm glad I listened to everybody else speak, because just listening to that made me realize, and there's so many things farmers are thinking about right now, right? So the legal stuff is probably the furthest from their mind. They want to be on the cutting edge. They don't want to hear me say September 1, make sure you're abiding by that deadline. But the thing that does, even if you're the tenant, and I know Kyle said he doesn't see a tenant termination very often, but this might be the year to try to make some of those changes. If you have a good working relationship already with your landlord, and you want to implement some of those sustainability practices, or you want to do something new with your operation, it might be the year to do a farm lease termination. The most common way to serve that would be in person. Serve the notice by the sheriff, but usually people just mail that, and I would say do it certified mail, return receipt requested. That's the safest way. You can always agree to terminate in writing. Now the Iowa code has changed with that. You can terminate in writing after that September 1 deadline. We've dealt with that before. I know Kyle and I have talked about that before. So I think people, you got to leave yourself a little negotiation room. And if you're still doing an oral lease, I think it's really time to finally get to the point where you investigate a written lease. And People's Company has a good lease. You've got Iowa State Extension has a very good lease. Of course, as a lawyer, I like the long form better, but leave it to me to do that. The Iowa Bar Association has a good lease. There's plenty of forms out there, and the things that I see, and I probably see the worst things, I'm assuming, that come up in my practice, but folks that maybe haven't terminated properly, or maybe they haven't protected their farm data by way of a lease. They just haven't made things clear enough in the arrangement, and lack of clarity is usually the thing that gets you in trouble in the end. So that's why I think the forms are out there, and if you have to pay to get a little advice, I think it's worth it on the front end.
Very good. Bill, are there any emerging markets for corn or soybeans which will increase demand and prices?
A good question. I think what we have seen, and being involved with CHS now, they've got a great worldwide network. So we get to see a lot of data there about export trade and so forth. And what I would tell you is that the supplies of corn and soybeans, they get moved around the world where there's either demand or the price dictates it. And that's notwithstanding any political pressure or whatever. There's still demand. And say, for instance, when China decided that, they were maybe a little mad at us and they were going elsewhere, well, other countries around the world picked up a lot of the slack on the bean exports, and so it got moved. In fact, we dropped our carry out from 900 million bushels down to 450 billion bushels. So there's always a market, I guess, is my answer.
All right. Kyle, you talked about tenant terminations earlier, but you weren't specific. Have you received any terminations from your tenants at this point?
Come to think of it, I don't think I have received any terminations at this point. It's only August 11th, so they may be coming, but I have not received any so far. I only received 2 or 3 last year. I feel if you have a good lease in place, you know, oftentimes they kind of work themselves out, but operators don't normally terminate landowners, but I did receive a few last year, but none this year at this point. So.
Sure. Mitchell, as you're going out there, and I know with the storm that happened yesterday, maybe it changed things, but over the Iowa and the rest of the Corn Belt, what are the areas that you feel is going to have the best yields, or the areas that might be below projections?
Yeah. The low spot was definitely going to be like more of that kind of Carroll, Sac kind of area where it was dry, and Dave kind of alluded to some of area close to that. The other area that I thought was kind of weak is like north of St. Louis, Hannibal kind of area. And then like Tennessee River has got some issue areas down there too. They had some planting issues down there, but other than that, things were going to be really good. Now I assume it's going to be more like Southwest Iowa as a potential for good. I think around here in Southeast Iowa, we're still going to be okay. But it's kind of hard to tell here still. I did just see a really cool picture come by on my radar showing some satellite imagery of this overall damage and path of destruction. I think that's going to be interesting, and see what some of these reports come out in doing. But I hope that some of the market will respond a little bit, and farmers can, you know, definitely be looking to get some of this grain priced, or if you're in a crop share situation, like definitely be on the phone with some of these guys trying to figure out what the opportunity for utilizing some of this. I assume there's going to be at least a little bit of a rally out of it. So might be an opportunity to get a little bit priced, but it's going to be hard to tell and see what comes through here. Because so much of this crop too, the issue here on the timing of this is that most of this crop was still in a milk stage. So it still had a lot of filling out to do. So a lot of these kernels of corn are going to be really small. The quality isn't going to be there. So that concerns me as well. On as we're feeding this grain to livestock or producing it into ethanol, the quality of the grain isn't going to be near as good here either. Also, when you hurt the crop, it opens up disease and everything else. So it's going to be a rough one here for a lot of our farmers.
Sure. Not an unusual story, unfortunately. Aaron, are there certain signs of distress the landowners should be looking for when selecting farm tenant, or how can, actually probably more toward your side, is how can landowners ensure the second half of their rent will be paid if the payments are split? How does that work?
Yeah, that's a great question. I mean, the first part of the question, I would say, you know, what are some of the signals that there might be distress? You know, I think just if you're talking to a tenant and they're not willing to give you any, you know, financial information, references, those types of things, that's probably maybe a bit of a warning sign. You know, we all kind of can do our due diligence and talk to folks and try to figure out, you know, where somebody's at. You know, some of that's going to be a little bit of a leap of faith, but if you're not terribly trusting on that aspect, you know, I think Kyle probably sees a lot of people that, a lot of landlords that will say, hey, you know, nothing against you. I know that economic times are kind of tight. I want to ensure that we get paid. You know, can you pay everything up front on March 1? He probably sees that some. You know, maybe the more common scenario is that payments are split. Kyle can kind of talk to that, what he sees. Now, if that's the case, I think everybody just needs to remember, and it's not often utilized, but there is a landlord's lien in Iowa, Iowa Code Chapter 570, that you can actually file a lien within 20 days after the tenant takes possession. By filing a UCC, it's really a simple thing to do. So file that by March 20th, because leases in Iowa go March 1 to March 1. Do that, and a lot of people, sometimes they're hesitant to do that because they don't want to appear that they distrust the tenant. But I think if you make that a normal course of your business practice and you just say, look, I do this for everybody, and once I get paid, I'll remove that immediately. I think it's becoming more common, and it's the best way to protect yourself, because then you can ensure that you're going to get paid at least from the crop that's grown on the property.
If a landowner wants to file a UCC, is that something they talk to you about, or can they do that on their own?
They can, yeah, and definitely. I help folks with that all the time. They can try to do it on their own. I mean, you can go on the Secretary of State's website. It's like $5 or $10. I mean, it's not very much money. But you want to specifically say that the lien is being filed for the purpose of perfecting a landlord's lien in Iowa. So happy to help. That's not an expensive thing.
Sure.
Hey, Mike, I had a follow-up on that.
Yes.
Aaron, let's say the lease starts April 15th and half the rent's due later in the year. Would you still have the 20 days beginning April 15th to file that lien?
Yeah, you'd want to make it clear that it's the 20 days from possession. So I guess you just want to be really clear in your leasing documents. Is that usually what you do, Kyle? If it starts, it's not typical though that it usually, it starts on April 15th, I suppose, unless you had trouble finding a renter or something. Have you seen that come up?
Yeah. So we filed the UCC1 liens as soon as the lease is completed. What we normally do.
Yeah, just in the code says 20 days after possession. So just be really clear in the leasing documents. I know a lot of people will end their farm lease on December 31st, and just be careful about that too. Probably not a big deal, especially if you get the crop out routinely, but the code does specify that it's March 1 to March 1. So just be careful about that issue as well.
Okay, very good. Thank you, Aaron. And Kyle, did you want to talk about mitigation for lease payments and how you try to approach that?
As far as, can you elaborate on that, Mike?
Yeah, just in terms of the UCC lanes, or even just how the vetting process for tenants.
Yeah, so oftentimes if I'm in an area, I know quite a few tenant operators who are great to work with, or I've worked with them in the past. If I have a farm available, I usually call a number of people and ask if they have interest. We have software as well to where we can identify operators in an area by clicking on a map, and I don't know exactly what it is, but you can find out who's farming close to that farm in question as well. So then I'll call a number of operators. I have sent out applications or some sort of a vetting process to where I ask for financials, and I ask for their long-term goals on the farm and what the bidding, how they would like to bid on the farm, and would they be willing to do these certain things the landowner wants. And that's always kind of a fun exercise, because then we can sit down with 20, 30 applications with a landowner and go through, okay, these are the best 5, and then let's decide on who we want on this farm, and so we've done that in the past as well. But normally finding an operator is not terribly tough to do, even in today's world. Yeah, so.
Bill, if things continue on the current trajectory, should farmers expect to see another coronavirus relief package this fall from the USDA, or is it too early to tell?
Well, it's probably too early to tell, but I would think so. So, the government's been very sympathetic, I think, not only the corona relief, but with really the trade war with China. I mean, that's had, I think, if you can glean anything from those charts that I put up, that's really impacted farmers as much as anything. There are other government programs as well. Of course, the revenue assurance. You got the ARC PLC type apparatus that kick in at certain levels. So it wouldn't surprise me either way, but right now I think the wind is blowing in the direction of sympathy for grain farmers.
Do you think the election will have any impact on that?
I honestly don't know.
Mitch, from a soil health perspective, what are 3 things farm managers should be paying attention to?
I think actually number one thing there that came to mind is number one is having the talk with the tenant and understanding what is their current traditional practice and how are they thinking about conservation. And it can start really simple. Talking about what's your tillage system, what's your fertility program going to be, and are you thinking about cover crops? As we have those conversations, then I think you can go into it's super easy, especially if you're in Iowa, to sign up for the cover crop cost share program. The farmer tenant can go up and sign up for the program, or the landowner can go sign up for the program. And what's great is you can have a little combination of both. But make sure that you have that cover crop plan in place. If you're not signed up already, you would definitely want to go and get that done just at your local FSA office. It's really, really simple. But it's just having those conversations, I think, and working together for those common goals that, hey, we're going to work together to do our part, improve water quality, build up this soil, make sure that it is being resilient. We're going to sequester carbon, improve microbial activity, and just make sure that our farm is fitting into long-term sustainability. We're going to protect it. It's a huge asset for all of us. So fitting in on that, making sure that we have a program in place. And then it's looking at the long-term upside here too. Dave has some really cool stuff going on with Lead and Harvest. There's a lot of different initiatives going on, a lot of companies that are looking at agriculture to be part of a solution here. How we're approaching some of those on our personal farm is to dip our toes in a wide array of things. I don't think you have to jump into some of these, especially supply chain connections or carbon markets or things like that. I don't think you have to jump in head over heels. But make sure that you do thoroughly understand those opportunities. I do think they're going to be good cherry on top for some revenue coming in for the farm.
Very good. Had some other questions come in. Question for everyone, but especially for Kyle. What is your experience in requiring a security deposit from operators? Do you require security deposits?
I do not. I require at least 50% of the cash rent due on the day the lease starts, or March 1st, so to speak. Oftentimes, I would say probably 60 to 70% of my leases are 100% up front. The other ones we may figure out a second payment November 1 or split payments September 1 and December 1, but the majority of my leases are 100% payment March 1st. A lot of landowners are going to the thought process where, they're not the bank in essence, and they shouldn't have to wait for their money or worry about not getting their money. So I do not require a security deposit, but I require at least 50% down for what is owed.
Very good. Another question that came in is, will the charts used during the presentation be available so that you can access them then at a later date? The presentation itself will be available. We have been recording the webinar, so that will be available on the People's Company website. And as we're able to get the presentations, Bill, Dave, Mitch, is that all right if we go ahead and post those on the website as well?
Sure.
Okay. Very good.
Yes,
So
I'm good to go.
all right. Probably another question for Kyle. Are you seeing rents stable at 2020 prices? And how is the government help affecting the rents?
Well, at this point in time, there's really nothing definitive as far as any government help, as far as like an MFP payment at this time. So it's kind of up in the air. We're all anticipating some sort of a payment here later this year, but nothing's been decided to this point. As far as rent, commodity prices are down from where they were last year. I haven't really started negotiating any leases yet, but I do believe that when those negotiations start, we're gonna, I'm gonna have to negotiate pretty tough to keep rents where they are potentially, just for the simple economics of it. So, and it all depends on where your lease was in previous years as well. I mean, if you have a 90 CSR farm and you're leasing it for $150 an acre, then, even in today's world, that you would think that lease amount should go up. But if your rental rate was fair for previous years, then maybe it's something that needs to be addressed. So.
All right, very good. And I think we have time for at least one more question. Mitch, we'll go back with you and maybe Kyle as well. How is the prevented planted acres recovering from last year with all the rain that we received?
My biggest takeaway on that, is that a lot of people got cover crop out there. They were trying to figure out how do they manage those here this spring. I have heard a lot of positives from that. But the key thing when you do have prevent plant or drown out is that it's those microbes that are in your soil that are drowning out. They're dying. They have to have living roots at all time to keep alive. They have to be fed, just like we have to be fed. So whenever you're in a situation like that, it's get living roots out there as quick as we can. Now, we don't want that to all be water hemp and giant ragweed, but if we can control some of those living species and make sure that our soils are being protected and continuously built up, that's been the key.
All right, and I guess one last question. Dave, would you like to speak towards comparing the technology that you have that compares what the planning and the operations are going on, and the particularly the spectrum photography to view this plant health versus soil type grid sampling? How do those two compare to each other? Can you do one or the other, or do you need both? And how does that operate?
Yeah, so
from a direct
go ahead.
operation from a direct operation perspective.
You bet. So when you think about imagery in general, right, if that's where you're kind of going with that, Mike, we're able to see with the multispectral that's available at a pretty regular rate how things are progressing. And, that's just showing variability, right? So it gives you a highlight of where you have variations that need to be looked at closer so that you can potentially figure out what's going on, okay, and then be able to take action. So the regularity of that information flow is incredibly valuable, particularly if you can't be on the farm as much, right? If you're talking about direct operations where your management oversight is digging down into those specific execution of all of the operations, being able to have that information flow that makes you more efficient in identifying where potential issues are. Now, when you start to bring that in, you're not going to be spending much time writing prescriptions on fertility off of imagery, right? You're not going to necessarily drive a lot of decision making that's really direct fertility-based information from that data source, right? So the sampling protocols are really, really important. So I don't think that one, it's mutual uses, right? They're going to lead and guide different decision making. And if you're going to take on a direct operations management schema, then you're going to need to have both of those information sources in that data flow.
All right, very good. Well, that concludes our time today. Thank you very much to the panel. I appreciate your thoughts and perspective and the time that you've done here, given to us, and want to thank everybody for joining this afternoon. So if you have any questions, please feel free to reach out to each one. Their websites are posted on the People's Company blog site. And of course, if you have questions about management, definitely we can help you at People's Company. So thank you very much, and everybody have a great rest of your day.
Thanks, everyone.
Thanks, everyone.